Okay, questions. You guys have any questions about this stuff? Now, we're going to get, if you're sitting there thinking, well, when are you going to show me how to trade? This is part of what you have to know how to trade. It's probably the most important part. But we are going to go through numerous examples in all time frames of quote-unquote trade setups, and we're going to dissect them in great detail. So that's going to happen. But the stuff that you're getting, the last two sessions of this are critically important. I don't, when this course is all said and done, don't just go back and look at the trade setup examples. These first two sessions are really, really important. It's critical that you understand these first two sessions inside and out. Chris, Chip, that's a great question. How often do I look at bar and profile graphs side by side? I do it all day long. I keep charts. I'm executing off of a bar chart, but I'm always aware of that profile chart. You know the charts that I show you guys, the DSA at night, for instance. Hold on, let me see. I think I have them here. Now, I typically have these tiled like this. Hold on. Well, I'll have like the YM, the ES, the TF, and the NAS. I'll have these four side by side. Let's see if here I'll do this. And what I'm looking at during the day, Chip, I'll have them all like this. Because one of the things I'm always cognizant of when I'm trading the stock index futures is if they're all participating or not. And if one is going to a new high for the day or the others. If one is going to a new swing high or the others. And this gives me a quick read into that. And the other thing that I like to see that sometimes you can lose sight of when you just stare at a bar chart, I like to see the migration of value intraday. Here's the Dow. And the other thing that I'll do, Chip, I'll split it out a lot of times because if I'm trading this and it's deep in the day, let's say the last 2 hours, I can't really read the finer points of development during the day. So if I split it out and I see, okay, well, this is the afternoon, and basically, this is a sort of and I didn't cover this, a double distribution. In other words, you have an auction here, and then you have a transition into another auction. You had conviction here. This is an example of not being able to see conviction if you're just looking at a profile view. So I want to see, I'm always reading the auction, and I want to get as up-to-date a read on what's going on as possible. So I am always aware and have my profile charts in anything that I'm trading alongside of the bar charts. So this afternoon, this is where that, here, I'll show you. You see this right here, Chip? You can see this conviction. The YM just took off here out of this level. And if I had been just looking at a profile chart, like this, I would have missed it. I would have seen price going higher, but I really wouldn't have seen the fact that this market had attempted to migrate lower. When it started this move, it was trading below the high volume node for up to that point in time. So this market had a shot at trading a lot lower. and it soundly rejected that idea. And this is an example of conviction, and it's also an example of why you want to be aware of what's going on your shorter term charts, or looking at a bar chart too, because if you're just staring at a profile chart, you won't see this. You really won't get the auction message that's being relayed in this. Michael, so when prices start to move away from the HPN, do I then refer to the bar chart to give context to market direction? Yes, yes. And the short answer to that is yes. Now let me show you a market that is just kicking my butt at the moment. Voila. Now, John Ocknett, you asked me about how do you know when a profile is mature? Well, you don't. But I'm starting, I'm looking at this being mature right about here. Well, we've almost doubled that, and it's still mature. so, I wish I could give, the real guru-ish answer and give you a definitive answer, but I can't. You just don't know. But if you look at this, there are very, very important auction artifacts. And the immediate one was this. This was a high volume node, and this high volume node formed near the midpoint of this entire structure. This was about as concentrated an activity, and you actually had some over here too, sort of coincided with it. So for all, this looked to me like, okay, we're off to the races. Now, when we came up here yesterday, I saw this, and I think Troy and I talked about this. I sold this, and I sold this because it was just sitting there, and the reward to risk was incredible, and I was well rewarded. Now, I didn't cover all my position, unfortunately, and I've been subsequently stopped. Why was I stopped? Well, this shouldn't have happened under an initial situation with this market trading down. Now I'm neutral. I've got to see more than I'm seeing now to make a decision about to buy or to sell this market. So I don't want to I don't want to leave you with the idea that, okay, all I have to do is identify balance areas, identify conviction in these key reference areas, and I'm going to net money. In the real-time trading, now once in a while it works just, and you think, wow, I've got it all figured out and I'm just going to net money. And then you have a market like this that just, kicks you. But if you use good money management and you're smart about taking profits and you don't get greedy. I mean, this market traded down into an area that it had to break. And then we had this, I didn't like this. I didn't cover all my position here, but I didn't like this. But when it plowed back through this, I said, I'm out. I hate it, but I'm out. And so let's go over here and look at the profile. Okay, here's the high volume node. You had all this conviction. I mean, it was just classic. Oh man, it was just awesome. But look where we bottomed today on a dime into this little teeny high volume node. I hate it when that happens. Now, this is a huge battleground. We have the high volume node, we have conviction down, we have conviction up, and the NASDAQ is now flirting with an area that it spent very little time in over the past month. You know, you have to respect this market if it begins to trade above this level now. It's tried to break down more than once. It's tried to break up more than once. And each attempt at the extreme makes it more and more likely that it's going to break through and trend in the direction that it's heading as it heads into that extreme. Michael, I don't understand. 25% is 25% of whatever the unit being measured is. Yeah, I set it at 25%. And I don't change. I don't try to optimize it from, market to market or profile to profile. Yes, it's TPO. Volume and TPO are extremely highly correlated, and I think I could make a really good case for TPOs being more consistent than pure volume. Because volume is just simply, most volume is just not directional. You have all this high frequency stuff that's really sort of artificial volume. Questions, guys? Look, if you get, all right, now we've done 2 sessions. If you've got questions, think about this stuff and write them down and send them to me, and we'll cover them next week. But everything that we've covered the last 2 sessions is foundation for everything going forward. So I really want you to understand it. James, good question. Roughly what percentage of the balance area do the extremes occupy? It varies. I can't give you a better answer than that. Don Jones, who does very, very rigorous work, has a definition, and his definition of the extreme is where the TPO count is initially 3 or less in the structure. Now, the reality is that I'm teaching you guys a dynamic view of applying the profile graph to understanding the auction process. It's not a rote binary approach. Don's approach is incredibly ingenious, but it's binary. It's programmed. It has to be yes, no. There's no room for nuance or gray. There is room for nuance or gray in what we do, but it can be quite well defined. And my approach is that when there is a structure that is mature like this, I'll start leaving out the individual, and you see me do this all the time, the individual auction units of smaller time degree so that I can get the read on them as to the direction and the likely break, the likely initiative move here. You can do that exactly because this is such a robust approach, because you have the same tenets and principles of development in effect in this structure, and this structure as you do in this structure. Now, as a profile matures, most price activity is random, but you're looking for that non-random activity, that initiative phase, and it's increasingly likely to occur the longer this structure holds. But James, I would say, I don't know, the upper and lower 12, 15%. You know, another thing that Don Jones does that's sort of ingenious, he takes his meta profiles and he divides them into octants, eighths, and he uses that to give you a tool against which you can measure the risk of initiative trades that are triggered under his breakout system, which he basically has a breakout system of meta profiles. And he actually has a tool that you can use on his website where you can go back and you can sort of back test. And you can use a 1 octant stop, you can use a 2 octant stop, you can use a 3 octant stop, etc. So there's no one rote way of doing this and of defining all these things and putting too fine a point on it. And I think for us, and what I'm trying to teach you guys is to take advantage of the fact that it's a dynamic process and it's a robust process. So use the smaller auctions as the tell for what's likely to happen in the bigger auctions. Now here's an example. Here's a real-time example, James. Now, the NASDAQ has tried to trade lower. It has conviction lower. It's trying to trade higher. It's a buying tail. It's traded through this area, and it's developing a high volume node. Now, I don't know. Let's just, for the sake of argument, say that we come in the morning and this is what we see. Well, if the NASDAQ takes out this level, I don't want to see it trade below here. I'm expecting this market to continue higher, and I have an objective, rational reason for not wanting it to trade below this area. I'm expecting an initiative move higher. I'm expecting value to move higher. Therefore, this volume node should not be retraced. And, you know, that's an approach that's different. I don't, you know, the next time this occurs, there might be more or less initial risk to that scenario. Michael, you say, so if I see this Gaussian curve with the HVN at the top, would it not be more than 25%? First of all, a Gaussian curve is going to have its, you know, the first standard deviation is going to be the mode. It's not going to be in the third standard deviation. This is, you know, the third standard deviation of this structure. This is 25%. This is the greatest 25%. The smallest range of the 25% of this structure. Well, we're going in circles, Michael. The value area approach was to apply the typical statistical, the distribution, the typical artifacts of a normal distribution, the 67%, the third standard deviations, and all that stuff. You can't do that. You can't put too fine a point on it. The market is not perfectly Gaussian. It's hardly ever, any profile is technically hardly ever perfectly Gaussian. There's too much incidence in the tails of almost any profile to fit the statistical definition of the Gaussian distribution. I realize some of this can be tedious, and you may not think it's all that important, but it is incredibly important to understand this. Does market delta allow you to collapse specific auctions like you do in CQG? Christine, I'm not sure exactly how market delta lets you manipulate the profile graph. It does to a degree, but I can't answer that question. Michael says no.